Hi guys, I have come up with this multi-time frame trading view chart setup wherein I can help you understand how do I do my day-to-day trading chart analysis. First thing, you can see that I have divided the chart layout into four different time frames. Okay, the left hand bottom corner, this one is the weekly time frame. The right hand bottom corner is the daily time frame. The upper right hand corner is the 75-minute time frame, and the left upper corner is a 15 minutes time frame. Now why I need to have this kind of a multi time frame setup is always you need to take a trade in the direction of the main trend. Now what I have tried to do is on a weekly time frame I tend to use the Heiken-Ashi candlesticks, because Heiken-Ashi is a very good candlestick pattern which helps us to identify a particular whether the chart is in a uptrend or in a downtrend. So it confirms the continuation of a trend. I have also tried to use the 50 period, 100 period and 200 period moving averages. Now you can see that all the moving averages have converged and they have come sideways. Okay, so and on the weekly time frame the Heiken-Ashi candle has turned slightly red, but the size of that candle is quite small. Since Heiken-Ashi is a laggard candlestick pattern, it takes time to convert the to change the color from red to green and green to red. I have so far to avoid that particular analysis drawback, I have also tried to use the RSI on a weekly time frame, which is Artharjan RSI. This is a customized RSI I created to have multiple levels plotted on the chart. Now how does it help me? Now this particular RSI, as you can see, one second, let me just change this. Okay, so what I have done is I have plotted the levels of say 80, then 60, then 40 and 20. Now these are the levels which I always want to see it on my chart. Then the blue color is actually the RSI, and the red colors that you blue color is the RSI. The red color, green color that you see is the 13 period fast moving average of the 14 period RSI, and the red line that you see here is a 34 period slow moving average of 14 period RSI. Now one simple question you may that may pop up in your mind is, why do we need so many RSI and so many moving averages on RSI? A simple answer to that is, even the RSI helps you to identify a trend, or it may help you to confirm that the trend is in a right direction, whether it's a bullish trend or a bearish trend. RSI, when it crosses above its own moving average, it is a confirmation of a strong uptrend or a downtrend, or beginning of an uptrend or a downtrend. So here, when the RSI crossed above the green moving average, it crossed on a weekly time frame, the uptrend began, and when it crossed above the red moving average, that is on the higher term time frame, I will mark a vertical line here so that you can see that on this particular day on a weekly time frame, actually the uptrend began. So the Heiken-Ashi candlestick pattern on the weekly time frame and the color of the candlestick also helps me decide whether in an uptrend, whether on a weekly time frame the chart is in an uptrend or in a downtrend. Now you can see that there is a small green candle which has got formed, red candle which has got formed, which is an indication that the uptrend has come to an end or a temporarily halt. The reason is why I'm using the word temporary is because on a weekly time frame the candles are still above 50 period, 100 period and 200 period moving averages. But when on a weekly time frame the Heiken-Ashi candlestick color changes from green to red, it is the time to sell the call options. Similarly, on a daily time frame, on the right hand side bottom corner, I have tried to use Artharjan swing plotter, wherein I use the 8 period moving average as my short term moving average, 21 period moving average as my mid term moving average, and I'm using the envelope of 55 period high and 55 period low as my trend confirmation moving averages. Also, I have tried to plot a 200-day weighted moving average to help me understand whether my trend is intact or the stock is trading below all the moving averages. So as long as my candlestick is trading above the moving average envelope, it will help me to decide whether I should be taking a bullish trade or a bearish trade or a bi-directional trade. As you can see, my currently on a daily time frame the trend is still up, though a Heikin-Ashi candlestick is showing a red color, but that candle itself is above my moving average envelope. Now this red candle on a daily time frame is indicating that on a daily time frame the trend has slowed down, and it is also an indication that the RSI has dropped below the level of 60. Okay, the 60 and 40 is the non-tradable zone, or that is the zone where I usually take bi-directional trading strategies in options. Okay, as you can see on a daily time frame also, the RSI is below is fast moving average as well as the slow moving average, indicating that the trend has slowed down on a daily time frame. So I cannot be taking any bullish trade. However, I can be taking as this particular chart pattern is indicating that the trend has slowed down. So when the trend has slowed down, I will say this is a not bullish, not so bullish kind of a scenario. Okay, in that case, the only thing that makes sense for a trader is to sell the call options, but not go for selling a put option or buying a put option, because the trend has slowed down and it is still a bullish in a bullish territory. Okay, now coming back to the uppermost right hand corner where I tend to use the ADX. This is the 14 period ADX, and I use the 75 period time frame for my trend analysis on 75 period. Now you can see that the ADX, though it is up, it has started to come down, and the minus DI, which is the red line, and plus DI, which is the green line, both are below the level of 25. However, on a 75-minute time frame, this is again an indecisive trend, because as you can see, for past from 5th of February until today 25th of February, Bank Nifty is trading where it was on 5th of February. So this is basically a sideways pattern. Okay, you can see that how to identify whether it's in a sideways or not on a 75-minute time frame. This is the, since if it is moving in a particular rectangle, that means it is in moving in a sideways motion. Once the moment it starts to move above this particular rectangle or starts to cross below this rectangle, then I would say a trend direction has established. Now what we are doing here is I have also applied the Artharjan swing trader indicator, which is nothing but the combination of two super trends. In this, the higher term super trend which I'm using is a 2 days super trend, and a 75-minute time frame super trend. And whenever, if the 75-minute candlestick is above the 2-day super trend, it is a bullish trend, and if it is below a 2-day super trend, it is a bearish trend. Now you can see that this 75-minute candlestick is below a 2-day super trend, and though there is a green candle, it is kind of a misleading candle because it is below the 2-day super trend, and even on a 75-minute time frame, it is below the 75-minute super trend. So this trend is again a not clearly established trend, so I will not be taking any call option, or I will not be going ahead and buying any futures contract in Bank Nifty. Now coming to the analysis on a shorter term time frame, what I have tried to do here is I have applied the Artharjan CPR indicator. This CPR indicator is nothing but is a combination of pivot points, and it helps you to give you the range, the pivot range from where the stock usually tends to bounce back. Now you can see that from this was the CPR which was created based on the previous day's candlestick movement. So yesterday the Bank Nifty was trading below the CPR. Today it has entered the CPR, and maybe the moment it tries to reach this particular previous day CPR level, it may face a resistance over there. There is another indicator which I have used is Artharjan volume oscillator. Now this volume oscillator is I have created on my own, and the way I have created this is I can show you the code of this volume oscillator. Just a moment. What I have tried to do here is, this is the volume oscillator whereby I try to find the volume, I try to see where the price is in comparison to the volume. So what I do is I try to take the 2 days, I multiply the closing price by 2, and I subtract the high and low, which is the total range of the candle from that particular closing price, and I divide it by the total range. So if the price has closed near the high and there is a high volume, then my volume oscillator will be above zero line, and if this particular closing price has closed near the lowest point with a higher volume, then it will be swinging below the zero level. Now this is the very clever way of identifying whether the smart players are entering a particular script or not. If the volume oscillator is moving above the zero line, that means there is a strong bullish trend that is emerging. However, I will be taking the trade only when I see a green Heikin-Ashi at least on a daily candle, and on a 75-minute time frame, this super trend, I get a green arrow here and I get a buy signal on the 75-minute time frame. I have also tried to use the Bollinger Band. Now Bollinger Band is an indication of volatility. So on a 15-minute time frame, I want the volatility to increase so that I can take a trade in the direction of the main trend. Now on a weekly time frame, my main trend is bullish. On a daily time frame also, my main trend is bullish. So I'll wait for the midterm time frame to give me the confirmation, and the Bollinger Band should expand. The volume oscillator should also print a very high volume bar, something like this. As you can see here, this is the kind of a bar I'm expecting to get printed on a 15-minute time frame so that I can enter the trade. The next indicator I have used is Bollinger Band percentage bandwidth. Now this Bollinger Band percentage bandwidth is nothing but it is an indicator of which tells me whether in a particular trend, whether the Bollinger Band expanded on a downward direction or it expanded in an upward direction. Whenever the percentage B indicator reaches above 1, it is an overbought region for me, and whenever it reaches below 0, it is an oversold indication for me. So now you can see if I mark a vertical line here, since it reached the oversold region, from there actually the small buying started taking place in Bank Nifty. So you can see that there were high volume bars that got printed. However, this is a very short term time frame to just depend upon the Bollinger Band percentage B indicator. I have just added this indicator for my own analysis. However, you may feel free to delete this indicator, as I'm not in a position to reveal my future analysis which I'm trying to create based on the Bollinger Band percentage B indicator. So you may feel free to delete this indicator for now, as it is only added for my future references. Once I am through with my hypothesis, I'll be able to share how I make best use of percentage B as an indicator for the overbought and oversold region. So guys, this was just a quick summary of how I do the trend analysis. Now you can see on a shorter term time frame the trend is sideways. Sorry, long term time frame weekly the trend is sideways because Heikin-Ashi is red. On the daily the trend is sideways. Also you can see the Heikin-Ashi has come down and the trend is red. But you can see that on a daily time frame the Heikin-Ashi red candles is not making a new low. So it is another indication that the fall might have fall in Bank Nifty has slowed down a bit. On a 75-minute time frame, we can see that there is a big green candle getting formed. However, the minus DI is still below the 25 line, so I can't say on a 75-minute time frame the trend has emerged. There is another way. Even if we don't focus on the minus DI or the plus DI crossing about 25, here the super trend indicator should print a green arrow so that it will say that on a short term time frame also my trend is bullish, and then I'm ready to take entry on my 15-minute time frame. So guys, this is just a way of analyzing multi time frames and come up with your own analysis or own methods of when to enter and when to exit. The sky is the limit. There are multiple indicators that are available, so feel free to choose any combination, any set of indicators that works best for you, and try to do multi time frame analysis only when you feel like entering a stock. So let me just quickly do a multi time frame analysis on the stock called Sanofi, which I had recommended uh, uh, to uh, to my mentorship traders. So just let me open that chart for you. Okay, so now you can see that on a multiple time frame, on a weekly time frame, my Heikin-Ashi candles. One second, this is weekly. Yes, and yes. So on a weekly time frame also, my Heikin candlestick has turned into green. On a daily time frame, my Heikin is green and just crossed above the 55 period envelope. Okay, on a 75-minute time frame, the short term super trend has crossed above the long term super trend and the green arrow has already printed, and here the Bollinger Band has crossed, and you can see that there is a very strong buying that has taken place in the Artharjan volume oscillator. So this is an indication that Sanofi, here you can see that it already gave a very strong buy signal, and from there if you check the daily time frame, Sanofi is today up by 3%. Okay, so it really helped me to identify a particular stock, whether it is in an uptrend or a downtrend. In fact, on a daily time frame, both the trends are still bullish and the Heiken are turning green. So this is the best time to enter Sanofi and get into a trade, as the volume is also supporting the super trend. The plus DI, ADX both are on a very positive side. So this is the right time to enter the trade. And in the morning I got a alert generated here. You can see that, sorry, I have cleared the alert, but it generated an alert on my chart studies, saying that I had identified a particular level beyond which I wanted to buy Sanofi, and that alert got triggered on TradingView. So now I'm good to go as far as any long trade is concerned in Sanofi. Now you might be worried that on a shorter term time frame you can see that red candle, but this is again a very short term time frame, whereas the long term time frame both are very strongly bullish. So you need not worry about this short term time frame noise, and you may enter the trade in Sanofi based on your money management rules. So this is all about explaining you how I do the trend analysis. If you want, I can quickly show you the Nifty also. So this is the Nifty. Okay, Nifty also you can see that Nifty is on a weekly time frame, it is red. On a daily time frame, Nifty has turned green and it is slightly touching the 50, it is below the 55 period envelope. Sorry, it is slightly above the 55 period envelope, and on a daily time frame, Nifty has turned green on a Heiken. Here also there is a green arrow. However, this green arrow has got printed where the 2-day super trend is already red. I want the 2-day super trend is orange. I want this 2-day super trend color to change to yellow, and the candle should be above 2-day super trend. So, and even on 15-minute time frame you can see that there is a red candle. So the higher term time frame is saying that Nifty is sideways. On a daily time frame, Nifty has started gaining momentum because the Heiken has turned green, but there is a red arrow above it. So I want this green arrow to form below this Heiken. That is when both the time frames would be giving me a confirmation that hey, the bullish trend is intact. At that time, maybe this particular candle will go above the 2-day super trend, and here I will see a huge Bollinger Band breakout happening on a 15-minute time frame. So that's where I will enter the Nifty call option buying or put option selling as a directional trade. Right now I can only take the bi-directional trades because it is giving me mixed results. On a weekly it is sideways, on a daily it is still Heiken is getting form, but the daily candle is yet to complete, and the Heiken should be breaking above the previous Heiken bars high range. That's when I can say that yes, now the trend is again resuming. So guys, this is all about how I do the analysis. So wish you good luck, and do the trailing stop loss. Okay, one more thing I wanted to highlight to you is besides this Bollinger Band, you can unhide this Bollinger Band, and whenever the entry gets triggered, you can activate this Artharjan ATR channel indicator. Now this Artharjan ATR channel indicator at the bottom, which prints the ATR plus high and low minus ATR channel above and below the candlestick pattern, and so this will help you to define your stop loss and get into a particular trade, so that without stop loss, if you are buying a naked future or equity, you need to use this Artharjan ATR channel indicator to define your stop loss, so that you take the trade or you remain within your cash loss limits. Never take any trade without having a finite stop loss on paper. And if you feel, and always on this particular, suppose you are taking an entry in this particular candle, and below this purple line is your stop loss, so always mark a horizontal line as I'm showing you here, and then add an indicator. After you have entered the trade, add an indicator to this horizontal line, because this is the horizontal line where you will be keeping your stop loss. Add an indicator that the price is crossing below this particular, add an alert to this line saying that the price is crossing down this particular line. So whenever this cross under takes place on 15-minute time frame, the alert will be generated and it will give you a signal to exit your trade. So guys, this is all you need to know about how to take a trade or enter the stock market. I hope you like this video. Wish you happy trading. Thank you so much.